Today we're going to be comparing JEPI and JEPQ to Yieldmax. Which fund wins? All right, the choice is clear for me. And a lot of my members would think that I'm going to just choose Yieldmax right off the bat, but there are a lot of merits for JEPQ and JEPI. And right now Trump says buy the market. And so we're trying to get capital gains growth and dividends at all costs. So we're going to compare these two funds by JP Morgan and Yieldmax, JEPI and JEPQ versus Yieldmax. You tell me which funds you think are the better investment. Yieldmax and even JEPQ helped me earn over $600,000 per year in dividends. Okay, $650,000. We're at $661 currently. This fluctuates. On Friday we had a flat day. We were up $1,000. Really, all that matters there is we're at 0.07, which, as you can see above, beat the indexes. All right, and so we're starting to get all of our performance back. We're now beating all of the indexes thanks to my approach using Yieldmax, margin, and the triple C's really. And my e-guide is finally out now on the triple C's. So whenever you're ready, email me for those e-guides and I'll send them your way. We're now down only 3.99% for the year. That beats the S&P, which is down 5, and the NASDAQ, which is down 9. The Dow's down 4. The Russell's down 10. So again, I told you we're going to be beating all of the indexes with our approach using these funds plus margin, and we're living financially free out of our brokerage account as a result. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. Look at our margin leverage here. It's $370,000. We got $10,000 again worth of dividend payments this week. Okay, every week we get about $10,000. That knocks down my margin debt. It has grown because I'm adding some things into the portfolio, which I'll discuss at another time. But JEPI and JEPQ are two of those funds that I've been adding in. Now, the whole question is, how do you allocate your portfolio to get this performance? And again, that's all in my volume 7 e-guide now, okay? I talk about all the funds, Yieldmax, Defiance, Cornerstone. I mention everything in there, YieldBoost, Defiance, Roundhill, and how I'm getting this outperformance, okay? I'm not worried about this margin leverage, as I always say, because my dividends of over $600,000 pay back my leverage in less than 1 year. And I'm also not worried about this interest on my leverage because I've negotiated my rates down twice. Many of my clients who bought my e-guides did the same thing. You get my number when you buy my e-guides, and I walk you through how to negotiate your rates down. My rates are a little north of 4%. So we're making money using margin, okay? Just using margin alone, we have an arbitrage opportunity with these Yieldmax funds, even with JEPQ and JEPI, because we earn more in dividend yields from those two funds than we're charged with our margin interest. Now, the first thing that I have up for y'all, the first thing that I want to note for you with JEPI and JEPQ is that their maintenance is both 30% maintenance. Now, I remember JEPI was 35% maintenance and JEPQ was 50% maintenance. It was 40 to 50% maintenance about a year ago. And that's why I couldn't put too much of my money in JEPQ. Here it is right here, 30% maintenance. If you need help understanding maintenance, that's in my volume 3 e-guide. Maintenance is the whole key to what I'm doing here. So if you're new to this channel and you're watching this live, for every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this over $4 million in purchasing power to get ahead. You see about $1 million right here. That's because I've invested so much in these dividend paying funds, especially some high maintenance ones like short vehicles that really mitigate our risk to the downside. So if you want to use your E-Trade checking card and go wherever you want in this world, you need to be able to have low maintenance names so that you can keep your available withdrawal high. That's what keeps us away from margin calls, and it keeps our available withdrawal high enough so that we can also pay our bills and withdraw freely out of our accounts. Even during this recent correction, I was never close to a margin call. None of my members and I were ever close to a margin call, because there's a way to de-lever from these funds on the way down and then go back into the triple C's on the way back up. And there's an art to doing this, and I think I perfected this in this volume 7 e-guide that's now out and ready for everyone to see. So I can't stress it enough. You need low maintenance names. This is the key to living the FIRE lifestyle, which means financially independent, retire early. And JEPI and JEPQ are now both 30% maintenance, which is huge. Now, could I just put more of my account into JEPQ now because it's only 30% maintenance, and JEPI, it's only 30% maintenance? Why not just dump a bunch of our margin into these two funds by JP Morgan? Well, there's an opportunity cost to putting your dollars into these funds because they only have 8 to 11% dividends. You saw JEPI was about 8%. JEPQ is about 11.5%, as you can see here. So even though we're making a profit by using margin with these funds because there's an arbitrage opportunity, as I just alluded to, there's still an opportunity cost to using these funds because what if we have a sideways to down market, okay? Well, these dividends from JEPI and JEPQ aren't enough to live on. All right, now JEPI and JEPQ, look at this chart. They move up beautifully. All right, we have Yieldmax right here. I have a chart pulled up for you right here. Yieldmax, it has bounced nicely off of the lows, okay? But nothing like JEPI and JEPQ. As you can see here, here's JEPI's chart. It's bounced nicely. And JEPQ's chart, which looks almost identical, has bounced nicely. And we still have a good while to go before we reach the old highs. And Trump says, buy the market. I don't listen to Trump. I don't listen to anyone. In fact, my guide, my new e-guide on the triple C's, it works regardless of any market condition, whether you're going up, whether you're going down. You cannot lose if you use my strategy with the triple C's, okay? Now we have other e-guides, you know, a margin e-guide, a Cornerstone e-guide, a put e-guide, you know, insurance, volume 5. We have how to sell puts, volume 6. But volume 7 is my best work to date. And that's because, again, I found a way to make it through the market and hone my strategy. I've always used the triple C's for 10 plus years, but I found a way through using my members and my live videos, through using Discord here, which when you buy my e-guides, you get free access to Discord for life, okay? You get my phone number for life when you buy my e-guides, and you get this Discord community for life. And so through them, I've been able to answer all of their questions so much, okay? And we've been bouncing strategies off each other so much that I've now honed my strategy to where I cannot lose in a down market. I'm not a financial advisor. I do not give financial advice, but I'm just telling you, I cannot lose going down, even with margin, okay? Even with margin. Look at my performance. We are outperforming, okay? Thanks to my approach of deleveraging, going down, and then as we go back up, you know, I make more money than we lost on the way down because of the way that I switched into certain funds, okay, the triple C's. You don't just buy the triples, you don't just buy the C's. There are nuances to buying the C's and the triples. And also JEPI and JEPQ, okay, I've been buying those too, but nothing like with the triple C's, all right? And that's because, again, there's an opportunity cost to using JEPI and JEPQ. They're great funds. They bounce back strong. Look at that. And they're going to move higher if the market moves higher. But you're not getting enough qualifying income, for one, in JEPI and JEPQ. I need the qualifying income from Yieldmax to get loans from the banks, okay? I need qualifying income so that I can live free from 9 to 5. They only accept pay stubs or dividends. And in some cases, they use options, as Kareen was pointing out in Discord. And some other people have pointed out that, you know, bankers take options as well, but my banker did. And for the most part, bankers and loan officers, they want to see 2 years of qualifying average income, okay? 2 years of average income, and that qualifies you for whatever it is that you're trying to get. So we need high enough income to live free from 9 to 5 and pay our bills at the same time. But, you know, most importantly, you know, and by the way, once again, if you're just joining this video late, this is how we're outperforming the market. It's with margin, okay, using the snowball approach, okay? So look at my dividends here. You know, my dividends you just saw were 600,000. Look at my margin debt here. My margin debt gets paid down so fast that my account grows so fast. It doesn't really matter what the market does. And JEPI and JEPQ can't really accomplish that. Schwab D can't help you do that either. They're more capital gains vehicles. Even Schwab D doesn't move up that much. But JEPI and JEPQ, more for the growth side of things. That's what you want to use those for. But they don't pay down your margin fast enough. You'd have to sell out of those shares to pay your margin down. And that's not the way to grow your account. You don't grow your account by selling shares. You grow your account by getting dividends, which then lowers your margin, and then it grows your account by the equivalent amount when you get dividends on margin, okay? So it's just like a house. When you reinvest in a house, when you take money out, when you tap the equity there, if you remodel the house, you increase your value of the house. If you don't remodel the house and you just spend it on stupid stuff, then you just have to owe more money on your house. There's no value there that you're creating. With the dividends, we're creating value by paying down the margin debt, once again, lowering our interest payments, and then that grows our account by the equivalent amount. And Yieldmax is our big key to doing this. Yieldmax and Cornerstone, of course. Cornerstone is finishing its rights offering process as you all know. And Cornerstone is my main vehicle to getting my growth, okay? If you're just new to this channel, if you're just now joining this live, or if you're new to my channel, you can see here by the chart of Cornerstone, we sold out at the highs of Cornerstone. So JEPI and JEPQ, they move up, but so does Cornerstone. Look at how this moved up. But Cornerstone gives you a 20% dividend, and it drips that dividend down at the NAV for 14% gains now. Okay, 12.79% gains now every month, on top of the 20% dividend. So when you're at around a 12% premium level with Cornerstone, everyone knows that that's the time to start pulling the trigger. That's in my volume 4 e-guide if you need more help playing Cornerstone. And we all know when to sell out of Cornerstone, because you either have read my volume 4 e-guide or you got the alert at Discord. This is why Discord is so special. We give you the Cornerstone rights offering announcement right here in our rights offering section. And so that's what told us to sell and avoid all this pain to the downside. Okay, so if you look at the chart here of Cornerstone, once again, we sold out right up here at the highs because we got the N2 filing alert, because we got the Cornerstone rights offering announcement, or you could have just read my volume 4 e-guide and known the premium thresholds to sell at. We sold out up here, avoided all of this pain right here, and now we're reloading at the lows thanks to the rights offering being finished. So Cornerstone moves up more than JEPI and JEPQ between rights offerings, and you get the special drip at NAV. Cornerstone is a 4-star fund, just in case you don't know. It's right here, 4-star. And look at the total chart right here. People are going to say, well, JEPI and JEPQ moves up. You know, they move up. Cornerstone doesn't move up on a long-term time frame. Yes, it does. Here's a 10-year chart. It moves up or left or right. Just factor back in dividends, drips, and rights offerings for Cornerstone. So it's a 4-star fund with a premium 12% right now that you get on top of the 20% dividend. We've seen premiums as high as 30 to 40 to 50% in Cornerstone on top of our 20% dividend, and you get days gains with Cornerstone. So you get 3 ways to grow with Cornerstone: days gains, the drip gains, and the dividend. And you get the rights offering, okay, which is really the 4th way to grow. And that's how I leveled up my account. That's how I got my account from 15,000 to over $1 million from Corona. All right, that's when I made my switch to Cornerstone, that's what changed my life. And that's, again, in my volume 4 e-guide. But in my volume 7 e-guide, the triple C's, it combines the triples with the C's. And it's an update on every other new ETF that's come out. All these new fund managers, Roundhill, Yieldmax, Defiance, YieldBoost, you know, et cetera, et cetera. Okay, I have all of them in that volume 7 e-guide. And so that's how I'm really outperforming the market. Okay, it's using Cornerstone and the triple C's to my advantage. Okay, you don't just buy them. There are nuances to buying these two funds, and they just blow away JEPI and JEPQ. Now, I still like to have some JEPI and JEPQ because, again, they grow on their chart, and now they're low maintenance. I just alluded to that at the beginning of the video. Now they're both 30% maintenance. So it's okay to have some JEPI and JEPQ in your account, but again, at what cost? Because they don't pay down your margin fast enough. And when we have a sideways to down market, there's no way that you can justify having these two funds when they don't pay enough of your bills, they don't pay down your margin, they don't grow your account by the equivalent amount in a fast enough way. So that's why you have to have the C's, Cornerstone, and that's why you have, because the triples don't really pay a dividend, but that's why you have to have Cornerstone, except, you know, around the, you know, you want to avoid it around the rights offerings. But you also need to have Yieldmax, because Yieldmax gives you so much income. It pays down your margin so fast that your margin is gone and your account grows by the equivalent amount. And then that's how you also get these percentages. Okay, that's why my percentages here, you know, down 4% for the year, whereas the S&P is down 5, the Nasdaq's down 9, the Dow's down 4. You know, that's why we're beating everything. The Russell's down 10. Because our margin gets paid down so fast. That's the secret to using margin. Okay, some people in my Discord, even rare few people, one of my honorary members there, Opt, who did not buy my e-guides. I just brought him over from Seeking Alpha because he's more of an expert on Cornerstone. He's always saying not to use margin, and I don't get it. Most of my people agree with me. Okay, I think he's in the minority, obviously, that when you're not using margin, you're not outperforming, because these funds don't move up one for one with the market. Yieldmax, JEPQ, JEPI and JEPQ, they do track the market pretty well, but some days the market will be up more than they are, and you have to offset that gap. Okay, you have to bridge that gap somehow, and my leverage is the way to do it. Now, I use this amount of leverage because Jay Hatfield, one of my mentors, he runs the fund PFFA and AMZA. He coached me about how on how he uses his leverage for AMZA. He uses about 30 to 35%. And that's why I'm keeping mine here at this sweet spot. It's not enough to really get hurt with, but it gets paid down so fast by my Yieldmax dividends that I just keep growing in the process, and my account keeps growing as a result, okay? So another thing that you need to keep in mind is that JEPI and JEPQ, they do not pay, they pay dividends, of course, smaller dividends, but you can't really sell options on them and benefit. I also sell options on the triples, as you can see here, and they're not showing the day's gains over the weekend, but these really help me get more performance as well, and I anchor my Yieldmax to them. We were talking about that in the past video. When I sell these options, it lowered my margin by about $50,000 to $100,000. It lowers my risk, it lowers my volatility, and it also gives me a DCA advantage, okay? If we were to get a sign in these options, then we get to buy at the lows and make even more money going higher. But we usually don't get a sign because assignment is rare here. These are very low prices that we're controlling these sold puts at, much lower than what everyone else is controlling the market at. So we have much lower risk than everyone else, much lower volatility, much lower margin, in fact, than everyone else if you're using these sold puts. And you have to use these to eke out more gains and, again, bridge the gap between the fact that JEPI and JEPQ and Yieldmax, some of these funds, they don't move up as much as the market one for one on an up day. Sometimes they might be up 0.7 when the market's up 1%. So you have to use margin like I'm using. And the sweet spot I found is about this. Sometimes I run 50% margin, but that's more for the experienced user. And you have to use these sold puts to bridge that gap. If you need help selling put options like I do, to do everything that I'm doing, to live free out of my account, to get more performance in a safe manner, that's in my Volume 6 e-guide. So, and I put in my Volume 7 e-guide a little bit on selling puts. And I also put in my Volume 7 e-guide a little bit on buying puts and updates on what I've learned from the recent crashes, okay? Because we were up thousands of percent in our recent put options that we had on during the last crash, okay? We were up thousands of percent. And I made some changes to my strategies, including with 0 DTE puts that you can find in my Volume 7 e-guide. So JEPI and JEPQ, okay? The choice is clear to me. You need to have a little bit of everything. I like to have all of the funds, okay? JEPI, JEPQ, Roundhill, Yieldmax, Cornerstone, the triples, you name it, okay? If I'm leaving anything out, just let me know. But it's about how you allocate those funds so that you can not only keep diversification going so that not one fund takes you down, but so that you can pay down your margin in a quick manner so that the risk really isn't there, and then your account grows at a much quicker pace than what everyone else is doing with JEPI and JEPQ or with Yieldmax alone. It takes a total approach, all right? So email me for my e-guides if you need more help doing what I'm doing, living free out of my brokerage account. We're down 4% for the year, but we're beating all of the indexes. The S&P is up down 5. The Nasdaq's down 9, Dow's down 4, Russell's down 10. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. We also have a Yieldmax channel, Roundhill, Defiance, Rec Shares, which is also in my Volume 7 e-guide, by the way. New updates on Rec Shares. We have Cornerstone discussion channel. We have a Canadian channel for Canadian investors. We have specifics on brokerages. Who has the lowest maintenance? Who has that special drip for Cornerstone? We have travel tips, news. I particularly watch this news feed that we have because it gives you all the nitty-gritty news, all the Trump negotiations, et cetera, all the market moving news. We have a 401k channel, life hacks, you name it, okay? So here are my members here. I can see all of your comments. I don't want the video to go too long. All right, so again, I hope you all enjoyed this video, and I'll see you on the next one. Take care, everyone. Bye-bye.